quite the volatile day in the market today. The NASDAQ started up, went down to 1.5%, went back to up almost 0.8%, finished down 0.9%. Guys, here's the heat map. Again, like a lot of days, look at this. This side is a lot of green. The big ones, a lot of red. Look at this red here. Mo, the Nvidia continued its skid. What are you seeing? Do you have a chart here of what happened during the day?
Yeah, this is a 15-minute chart. So each one of these candles is 15 minutes. And you can see, I mean, you started the day $464 a share. You dropped to $455. Then you went all the way up to $468 and then all the way back down to $457.
This volatility is
crazy.
Yeah, it's crazy. It's kind of like saying the market doesn't know where to go. I'm not going to be a guy who's going to guess where it's going to go. But when you see this Magnificent Seven in their history, which isn't very long history, but 3 of their 8 worst days have come in the last 14 days.
That's crazy.
Yeah, there's a lot of volatility out there. What's going to happen from here? I have no idea. But guys, look at a company like Nvidia. Mo, Nvidia is down to $111 per share. What was the low today for Nvidia? Because I think I saw like 106 or something, if I'm wrong. Was that maybe yesterday? But Nvidia is really struggling it from 140 just a few weeks ago.
106.30.
Oh, I was right. 106.30.
That was around 10 o'clock this morning.
That's a big fluctuation. To finish at 112, get down to 106. I mean,
it actually went to a high of 116.63.
A swing.
Yeah.
Tell me the markets are rational, people. When a company that's $3 trillion in size, market cap, fluctuates 8 or 9% in one day from top to bottom.
Yeah, that ain't normal.
No. Now, guys, if you're new to the channel, this is our Everything Money 24/7 channel. We talk about earnings. We talk about news. We do market recaps. We do 4 or 5 videos a week. If you like the idea of hearing this kind of conversation and talk, do me a favor. Subscribe to the channel. We're going to be here because we're here to teach a process. We love red days. Those are our favorite. If you want to avoid fearing red days, subscribe to the channel. If you want to have peace of mind when markets do get rocky, which they will, subscribe to the channel. Trust me when I say it'll be better for you to change your mindset if you don't have it already, that cheaper prices are better. And it's easy to say cheaper prices are better now. But when you have stocks that are down 50, 60, 70%, it's hard to believe that. Now I look at Nvidia and it's had a massive run up. What's going to happen next? Listen, it went to, after split, $60 a share, fell back to $40 a share, and then ran right up to $140 a share. Mm-hmm. Nobody knows what's going to happen. Anybody who says otherwise is incorrect, and they're lying to you. They're just trying to sound smart. What we're trying to do here is teach a process of buying great companies at good prices. Nvidia is a phenomenal company. Is it the right price? That's the question you have to ask yourself. So a very volatile day. Mo, Google down another 3%.
Whoa.
Yeah.
So all of these, I mean, if you look, Tesla, Amazon, Meta, Google.
Tesla was up.
Is that the Magnificent Seven? Those 7 right there?
Yes, correct. It looks like
one positive.
Oh, yeah, you're right.
One positive.
One positive company. 1, 2, 3, 4, 5, 6, 7. Is that right? Yeah, you're right. One 7. Positive, all 7. Wow. Yeah, that's incredible. That's really incredible. But there's a lot more green out here than you would think for a day like this.
Yeah.
Man, it's very interesting. Look at GE up. I mean, Boeing up 2.5%.
It just amazes me when you look at this thing. You think Johnson & Johnson, Exxon, and these things are moving 2% in a day. Salesforce, 2.7% a day. The values of these multi-billion-dollar and multi-trillion-dollar companies is changing 2% a day.
That's why
it's crazy.
This is exactly why when people say there's a thing called the efficient market theory, where all stocks are selling for their reasonable value because it factors in all information. It's absolute BS.
It's nonsense.
It's garbage. And all these Harvard professors and all these,
they
all think that, and they're absolutely wrong. Because if that was the case, you couldn't see outperformance. Is outperformance difficult? Yes. What makes it difficult isn't analysis of the numbers. It's the stomach to see stocks fall and you buy into it more. That's hard to do, but we see it all the time. Look at a company like PayPal. It's below $60 a share. Its all-time high was $310. The people who loved it at $310 aren't buying it at $60. Why? Because they're not really investors. They're speculators. Because of the numbers, if the fundamentals are the same and the stock's earnings and revenue are going up, the free cash flow is up since it was at $310, shouldn't you be buying it?
Mm-hmm.
Right, Mo?
Yeah, for sure.
That's what makes investing so difficult. And when you see this kind of volatility, the great news is, guys, if you see markets fall overall and you see your stocks fall with it, that's easier. It's hard when stocks are going up and your stocks you bought are going down. That's much harder.
Yeah.
Like PayPal.
Mhm.
But PayPal was massively overvalued at $310 a share.
Right.
And that was just the way it was. Okay. But it doesn't mean at $60 a share. A good investor is somebody who says, I hate it at 300, I love it at 60. That's an investor. An investor is somebody who sits there and looks at the fundamentals behind the business. And if the fundamentals are getting better, but the stock is down, you have to ask your question of, am I a buyer or not? And if you're not a buyer, what are you doing? Now, dollar cost averaging into low cost ETFs, we love it. Taking a piece of your money and buying individual stocks, we love that. But we have great companies here. But guys, mark my words, 20 years from now, the top 7 companies are probably not going to be these 7. That's just the way it works. From 2000 to now, there's only one company that's still up here that was in the top 10. Microsoft. I believe that's one of the top 10 today. And Microsoft went through a big 80% drop to the point where in 2011 and 12, people thought the company was dead, even though revenue was growing 7 to 10% a year and profit was growing 11% a year. That's the markets. Go ahead, Mo.
Even when you think about the FANGs.
Yeah.
Netflix.
Oh, FANGs. What's a FANG?
Netflix was in there. Netflix isn't in there. That was
just,
just a few years ago.
And even though Netflix is now close to all-time highs.
It's true. But what's a FANG anymore?
Yeah.
I mean, I forgot about the FANGs.
And by the way, their numbers are way better now than they were back then.
That's it.
That's the incredible part.
Yeah.
FANG. Facebook,
one, huh?
Amazon, Apple, Netflix, Google.
Yeah.
That's it.
I always called it FANG-M. How do you not have Microsoft in there?
Yeah, well, they didn't have a lot of things in there.
Yeah.
Now it's,
Tesla.
and the end was, well, maybe it still could be FANG because it's not Netflix, it's now Nvidia.
That's true.
Yeah.
That's true.
Yeah, so either way, guys, this is a great channel to be at just to get a perspective on the market. Remember, we're not going to react to short-term price movements as a way of inciting fear in ourselves. We're here to look at this rationally. And I'm going to repeat that over and over, and you need to repeat that to yourself over and over. That way, when things do get rough, you're going to make the right decisions. Guy Spear, a friend of the channel, wrote a great book called The Education of Value Investor, and he said what boggled his mind about the great financial crisis was all his friends when the markets were up and said they were value investors suddenly were too scared to buy stocks when stocks were down 40 or 50%. He thought to himself, what happened to all these value investors? Guys, I hate to say it, it's going to happen to a lot of your friends. I want you to be different. That's key. Because being a value investor is tough because when stocks are flying high and you're not buying into the hype, you're considered wrong. And when stocks are falling and you're not the one afraid and you're buying, you're considered wrong for what you don't see. But that's just the way it is. So guys, if you made it this far and you like what I'm saying, do me a favor, follow me on the Twitter machine at @EMPaulG. I'm a very active person. I've only been on this service for over 2 years. I have 4,200 posts. I interact with people. I love making comments. I love putting polls out there. You're going to love talking to me on there. And don't forget to subscribe to the channel. Thank you very much for your time.